Welcome back again to the channel. It's HBFS and it's your boy Steve Bino. In this video, I want to share with you guys the top chart patterns that works in boom and crash. Yeah, we know that there are different chart patterns. Of course, most of us is aware of that. We have the head and shoulder chart patterns. There are just so many. The cup and handle, the double bottom, double top chart patterns, the falling wedge flags. There are just so many of them. But which of these chart patterns works so fine with boom and crash? Now, over the years have traded boom and crash, I have come to realize that there are some few chart patterns that works perfectly well in boom and crash, and that is why I'm sharing this with you. That among the various chart patterns we have, there are just few ones that works very well with boom and crash. Well, in this video, we're just going to talk about just two chart patterns that works very fine in boom and crash. Now, the first one I want to talk about is the double bottom chart patterns. The double bottom chart patterns. The double bottom chart patterns. When we talk about double bottom, basically what will come to your mind is something of this nature. Sorry. So yeah, so we're talking about a double bottom chart pattern. This is simply what is going to come to your mind. Yeah, you're actually right. So among all the different chart patterns we have, this one seems to work effectively on boom and crash. So whenever you are trading and you come across these chart patterns, it usually works. Yeah. Well, I'm not saying for every double bottom chart patterns you see in boom and crash is gonna work, but what I'm saying is that 80% of the time double bottom chart patterns do work in boom and crash. 80%. It do work 80%. Now this is a double bottom chart patterns. Now the market came, the buyers took it to the upside, came down again, and we saw another rejection. So once we see the market moving in this nature, all we have to do is just indicate the first leg and wait for the second leg. And wait for the second leg. Yeah. So once the market gets to the second leg, we wait for possible rejection. And once we see the market rejecting it, we can long the market. And when trading our double bottom chart patterns, our first take profit is the neckline. So if we want to take our profit, the first take profit is gonna be here, not here. Please get it. This is gonna be the first take for, because sometimes the market might actually reverse at this level and create what we know as the sorry it can also do like this, guys. So when we are going long, when we are taking the double bottom chart pattern entry, whether boom or crash, whatever we are trading, either boom and crash, once we are able to spot our buy position at this entry, this is the neckline. It is called the neckline. The neckline of the W. This also it is frequently called the W pattern. It is the same thing as the double bottom chart pattern. So the neckline of the W, that is where we take our profit. That's COT, because sometimes market might actually get here and reject and then move to the downside. We then see something of this nature, forming a possible triple bottom chart patterns. We could also have something like this, triple bottom chart patterns, and then long, and then long. So this is simple way you can actually trade the double bottom chart pattern. Amongst every other chart patterns, this one seems to respect boom and crash a lot. Now take a good look at the current market of boom 500. This is boom 500 30 minutes time frame. This is the current price where boom 500 is right now, 5,976, 5,976. This is the current price of boom 500. And notice what happened here. This is leg 1. This is leg 1. Just as we have said here, let me reduce it. Okay, just as we have said, now this is leg 1, just as we have said here. This is leg 1. Market came here, got rejected and moved to the downside, and this is our leg 2. And this is our leg 2. So market came here, which is this this downward movement, same arrow we see here, and got rejected, came to this level, and then which is this level here, got rejected to the downside. So here we would have taken our entry here for buy position. There is a clear buy position entry here. So when we go long here, like I said before, this we're going to take our first take profit here. This is going to be our first take profit, because here is the neckline. So here is a practical example of a double bottom chart pattern. And like I said, among all the different chart patterns we have, double bottom chart patterns and double top chart patterns works very fine in boom and crash. 80% of the time you trade double bottom, double chart, which is popularly known as the W and M formation, it actually works. So here the first leg, here the second leg, and this is going to be our take profit. Our stop loss can just be a little below the first leg. For double top chart patterns, for double top chart patterns, for boom and crash, when we talk about double top chart patterns, we have movement of this kind. We have movement of this kind, and here, and then we move like this. Don't mind my drawings, and then sorry guys, okay, I'm not too good with drawing, so okay. So when we talk about double top chart pattern, it's something of this nature. The M formation is popularly known as the M chart patterns. It's very opposite of the W chart pattern. So this is, so price moves to the downside, to the upside, but the bears actually try pushing the price down, and there was still much buyer at this level. They tried taking the price up, but getting to the high, this previous high, we saw the sellers, there are a lot of pressure here by the sellers, and as a result, it's going to push the price down. It's going to push the price to the downside. So this is going to be our first leg, and this is going to be our second leg. Now notice there's something I want to let you guys know. It must not be equal, meaning the two leg must not be equal. because sometimes I've seen people, it must not necessarily be like this. It must not necessarily be like this. It must not necessarily be like this. What I'm saying, like, look at it here. Yeah. Okay, it must not necessarily be of this form. As you can see with this first one here, notice here that the second leg was a little above this first one. Notice it. So it must not be perfect like this, a perfect M formation. It must not be. Sometimes a double top sharp patterns can be of this form. It can be of this form. This is going to be the first leg and this is going to be the second leg. So it necessarily must not be, the two legs must not be equal to each other. So it must not be something of this nature before it becomes a double top sharp patterns. No. Here it can be a little above like this example we see here, and it can be the second leg can be a little below the first leg. So whichever it's fine. Whichever it's fine. But I just want to push it in. So this also is a double top sharp pattern. So here this is the first leg and this, sorry guys, and this is the second leg. So like I said, the same method we use in taking our profit in the double bottom sharp pattern, that's also what we use. So our take profit is going to be here. And once the market breaks through the neckline, whether the double top sharp patterns or the double bottom sharp patterns, we don't simply go in, wait for a retest, and then go long. Now in shorting these double top sharp patterns after the break of the neckline, what is required for TP? You can just take the measurement of the first leg. You can take the measurement of the first leg, for example. Now, so this is the measurement of the first leg here. Now, if you want to short the market after the break of the neckline, wait for a retest, and you take your profit using the length of the first leg. So if, for example, we want to take our entry here, this is going to be our take profit here. Okay, let me move it away from the candle. So this is going to be our take profit here. The exact measurement of the first leg from the entry to the base here is going to give you a take profit. So this is how you can trade the double top sharp pattern. It works very well in boom and crash, trust me. Let's look at the real life application of the double top sharp pattern. Remember, this is still boom 500. This here is our first leg, and this is a second leg. This is a first leg, this is a second leg. And what happened? And this, because this is a first leg forming a double top sharp patterns. Price got rejected here and pushed to the downside. Now price came back here. This is our first leg, got rejected too. So it's a double top sharp patterns. And what happened? Price moved to the downside. Again, this also is a double top sharp pattern. Look at it here. Price got rejected. Oh, sorry guys. Okay guys, this is also a double top sharp patterns. This is double top sharp patterns. Price got rejected from this region, went to the downside. Buyers tried pushing the price up again and came to this region. So again, it's a double top sharp patterns. There was a rejection here, there's another rejection here, and this here is going to be the neckline. So our take profit is going to be here, here. And what happened? We saw that the sellers took the price down. Sellers took the price to the downside. You see, so double top and double bottom chart patterns works very fine in boom and crash. I'm telling you guys, I've been trading boom and crash for some time now, over a year, and it works very fine. It works very fine. And we take our profit here. This here, okay, let me use this. Remember here, market got rejected. We have a double top chart patterns at this level here. Very fine. Let's remove this and notice again that when the market came back, and also got rejected at this region. Here again, it's a double top chart patterns. A double top chart patterns here. A double top chart patterns. It's just like we did here. So the movement was of this nature. Price came, oh sorry. The movement was of this nature. Price came down here and then moved back to the upside. And what happened? Forming a double top chart patterns, it came to the downside. It came to the downside. So this is exactly what happened. This is exactly what happened. And notice, like I said before, it must not be equal to the first leg. This was the first leg, the first top of the double top chart patterns here. Price moved down to the downside, and buyers came in. We saw this rejection, took the price to the upside, forming another double top chart patterns with this here, forming a double top chart patterns here. Yeah, and the market went up. So 80% of the time you find double top chart patterns and double bottom chart patterns in boom and crash. It works. Another double top chart pattern, double bottom, first one here, second one here, and what happened? Market went up. Another double top chart patterns, first top, second top, price went down. Another one here, another top here, price went down. So double top and double bottom chart patterns are really a nice chart patterns to watch out for in boom and crash. So even if we should check crash 500 too, sure, you're still gonna find the same thing. This is crash 500, this crash 500, this crash 500 guys. Now notice what happened, exactly the same thing. Double top and double bottom chart patterns works very fine. Look at it. We have here the bottom, and we have here another bottom. And what happened? Price kept going up. Here we have first bottom, here We have the second button. We have the second button here. Sorry, I don't know what's wrong with this. So we have the second button here, and it kept going up. It kept going up. Here we have top, the first top. Here we have the second top. And what happened? Price pushed to the downside. Like I said, double top chart patterns, double bottom chart patterns. First take, this is gonna be our take profit. And notice again, this is also forming what we call the triple top chart patterns. The triple top chart patterns. Those triple top, first top, second top, third top. So it's gonna push price back again. It's gonna push price back again. So we have to watch. We have to watch. So double top chart patterns and double bottom chart patterns are very effective when it comes to boom and crash. Take a look here, guys. Take a look here. Take a look here. Just look at your chart. You're gonna find them. Just look at your chart. Double bottom chart patterns, price went up. Double top chart patterns, first top, second top, price came down. It's a lot in the market. It's a lot, guys. It's usually a lot. Just it, guys. I hope you guys find this video informative and helpful. Yeah, this is the two chart patterns that work very effective in boom and crash. In our next video, if you want to also read another video of this kind, another chart pattern that works very well in boom and crash, kindly let us know in the comment section. Give this video a thumbs up and do not forget to turn on the post notification bell. And if you're watching this video or watching our video yet to subscribe, kindly smash that subscribe button. It really helps us, guys. So this is it. It's your boy Stevano, and see you in our next video. Peace, guys.